It's looking at some of the volume here versus the last 30 days. Dow Jones trading 25% more than the recent average. The S&P almost 30% more than the recent average. So I've got a market moving higher on some big volume. Do you note that? Is that important to you?
Oh yeah, as Barry mentioned, it's the breadth and the volume is quite significant, and I think you need to look at it from a standpoint of even those who were buying this were looking at it as a bear market rally. I think you now have to start to see people who manage money start to look at this as, am I missing the boat? If this isn't a bear market rally and it's a proper one, and inflation's going to moderate, and sooner than later, the Fed is going to acknowledge it. And as Barry said, those of us in the real world, we're seeing prices coming down. One of the things that's been holding CPI up is rent, and it takes a while for that to catch up. But the real prices that we see every day are coming down. And I think the Fed's going to get the message real soon, and those who are thinking this is just a bear market rally are going to get caught out.
So, Barry, what do you think as a professional money manager? Does this feel more like a bear market rally to you, or is this maybe the process of setting in kind of a bottom and maybe potentially a move higher in anticipation of moderating rate increases?
So I've been of the belief that the bear market that began in 2022 was really a cyclical bear within the longer secular bull market, meaning markets can't just go up and up and up. They were plus 18% in 2020, up 65% from the bottoms, plus 28% in 2021. You were overdue to mean revert, to give some back. But the assumption that throw out all that stimulus, throw out that giant 34% reset, and suddenly we're in a new bear market just never resonated with me. This really feels much more like that was the cyclical bear within the broader bull, and now we're starting to move back towards prior trends, which is the economy is still doing pretty well, earnings are holding up well. As problematic as inflation has been, I think team transitory may end up having the last laugh.
Team transitory, I haven't heard that word in a while. Hey, Vince, I'm looking at the Bloomberg Dollar Index. It's off about 1.8% today. What are the currency markets? What have they been telling you over the last few days?
I actually wrote about this a couple of days ago, that it looked to me that the dollar was rolling over, and it was rolling over because risk was beginning to get back into the bid mode, as Barry just mentioned. We're the dollar and the S&P 500 started into an inverse correlation in March, fell out a little bit, and then in August it really came back in sync again. So when you see the S&P 500 rally, you're going to see the dollar sell off. And a few days ago, and I'm looking at the dollar, and it looked like it was beginning to roll over to me. That just enforced in me the feeling that we had a rally coming in the S&P, that stocks were coming. And the S&P 500 held the 50-day yesterday, not the most significant technical level, but it held there a few times, and now it's poised to test the 200-day, which is considerably higher. But a break of that,
I watch this going
into next year.
And girlfriend just PDS to get
your Fed Chairman Jay Powell, you saw the print at 8:30 Wall Street time today.
That's not son.
How has that changed maybe your thinking a little bit?
You don't look like you.
My complaint about Powell is that he was late to get off of emergency footing. He was late to recognize when inflation had spiked beyond just their target of 2 or 3%, and now he's been pretty late to recognize that we've passed peak inflation and it's beginning to roll over. So if I'm the chairman of the Federal Reserve and I'm looking for an excuse to stop tightening because we've seen the light of the eyes of inflation, well, today certainly gives it to you. They're probably going to do 50 basis points in December, but truth be told, they're done. They don't have to do anything. Look, all the problems that we're dealing with on an inflation basis are not the sort of inflationary problems that lend themselves to responding to rates. We have a shortage of homes. We have a war in the Ukraine. We have a semiconductor shortfall. Those aren't rate-sensitive areas.
Yeah, absolutely, and that's similar to what Vince has been saying over the last several months as well. So appreciate getting your perspective, gentlemen. As always, great to get you two together. Founder Barry Ritholtz, he's the founder of Ritholtz Wealth Management. He's a host of Masters in Business. That's a pretty popular podcast. I recommend it. And Vince Signorella, he's a global macro strategist with Bloomberg News. Good stuff there, good perspective on a risk-on day today. Balance of power. That comes up. David Weston, he will bring the conversation forward for you. He brings Wall Street in Washington together. This is Bloomberg. All right, Paul, thanks. Bloomberg Business Time in the District coming up to 11:57. We'll check traffic and weekend weather before Balance of Power with David Weston, getting more reaction to the inflation data with White House Economic Advisor Jared Bernstein. This is Bloomberg 99.1.
Why do alternative investment managers rely on Pershing for personalized prime services? Lisa Lewin, a director of BNY Mellon's Pershing Prime Brokerage sales team, shares how we help you consider everything.
As the alternatives industry continues to evolve, Pershing wants to know, are you getting the service and support you need to overcome today's obstacles and challenges? Are you confident in the stability of your counterparty? Do you need help expanding your investor network? Do you have the latest allocator insights on investment strategies? Whether you're looking for customized financing, securities lending solutions, or capital introductions, Pershing is an award-winning prime broker committed to providing exceptional service and dedicated to meeting your needs, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC. Bloomberg 99.1 traffic and weather. We've got some good news over on 5th Street in Northwest. It's been cleared of the police investigation at M Street Northwest, so that northbound route should be available to you once again. DC 295 is still sluggish on both sides of the roadway. Northbound, it's a slow ride from Pennsylvania Avenue towards East Capitol Street, with the southbound delays also stretching from Burroughs Avenue towards East Capitol. Now, if you're traveling onto the eastbound side of I-66, just east of 123, there's a left lane work zone that's going to jam you up briefly in the area there. And now, the 99.1 4-day weather forecast from meteorologist Rob Carolyn. Today, clouds will continue to move in, milder and highs in the upper 60s. Tonight, rain arrives late, lows in the upper 50s, and tomorrow, rain and heavy at times. Breezy and mild and highs near 70. Tomorrow night, rain ends, remaining breezy, lows in the upper 50s. Saturday, partial sun with highs in the low 60s. But on Sunday, lots of sun and rather cool, highs only in the upper 40s. Currently, it's 64 degrees in Dumfries. We're at 63 in Darnestown, and it is 65 in the district. This report is sponsored by Lowe's. November is back at Lowe's. Power the possibilities with savings on DeWalt tools like the DeWalt 16-piece reciprocating saw blade set. Was $29.98, now $19.98. It always pays to be a pro at Lowe's. Ends 12/28 while supplies last. I'm Danielle Deverell. Traffic and weather on the Beltway area's only 24-hour business station, Bloomberg 99.1 and 105.7 FM HD2.
Broadcasting to the nation's
They stole my room.
WDCH-FM, Bowie, Baltimore, Washington. WJC-FM HD2, Catonsville. Bloomberg 99.1. From the world of politics to the world of business, this is Balance of Power with David Weston. Headquarters in New York to our television and radio audiences worldwide. Welcome to Balance of Power. I'm David Weston. Well, the big news yesterday may have been midterm elections. The big news today, certainly for the markets, are those CPI numbers. And by the way, the markets are saying they cared more about CPI than they did about the midterm elections. Here to take us through the numbers and also the market reaction is Abigail Doolittle. So, Abigail.
Wow is right. And what's really interesting here, the markets are more of a wow than the numbers. Now, the good thing about the numbers for everyday Americans, all of us really, and for the Federal Reserve, and that's why the markets are so happy, is that inflation did come in lower than expected. That CPI for the month of October coming in at 7.7% versus the estimate of 7.9%. But I would argue, yes, and core came in better than expected too, but I would argue that it has not so much to do with that beat, but it has to do with the fact that we are now down 4 months in a row. Peak inflation could have been put in back in June at 9.1%. We're almost 1.5% below that reading in June. So I think that that's why investors are so happy. You know, we always talk about how a day or a print does not a trend make. Well, here we have 4 prints pointing to the idea that inflation is coming in. Now, is the market reaction with the S&P 500 right now at 4.7%, the best day since April 2020, a little bit overdone? Because, of course, inflation could go back higher and it's still at a 40-year high? Yeah, maybe so.
At the same time, we've heard again and again and again that the markets get ahead on the way up and on the way down. And if they saw peak inflation, particularly if they thought the Fed might start to back off, we may get relief in the markets, equity markets earlier. And good, by the way, the bond market is really reacting as well.
Yeah, the bond market is extraordinary in terms of yields absolutely coming in. Let's just call it 25 basis points across the curve. What that reminds me of is the dislocation and kind of what you're talking about here, but in a different way, actually, because I don't know that the markets have done such a great forecasting job or getting ahead of these moves just because of the size of the moves that we have when data actually does come out. I think that we need to see more because there has not been any indication in my mind that the Fed is planning on, trailing off the fact that it needs a higher terminal rate. Yes, of course, today, Patrick Harker and Lori Logan of the Fed were talking about, well, maybe we can ease just a little bit. And for December, that's the idea. It's no longer going to be 75 basis points. But we need more data. Inflation could go back higher. And in addition, again, 7.7%, that's still very high. Something else to think about, the biggest portion of the overall CPI, it was housing. The whole reason the Fed has wanted to hike is because of the housing cost. They want to bring that in. If that's still the big piece of expense, they have more work cut out for them.
And as we know, housing